please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You're watching Business Lunch. I'm Nisha Podar and with me is Manglam Malu. Manglam, good afternoon. It's looking like a weakish day of trade today. A lot of macro concerns are really weighing heavy on the rupee and on the market. And the market clearly is mirroring the kind of trajectory that rupee is showing. So rupee touching the record levels today, 72 rupees 50 paise against the dollar. And that's really weighing on the overall equity markets as well. Sensex, Nifty, both more than 1% down at the moment. Mid caps have taken a slightly bigger knock, and banks are also underperforming today. So all in all, it's a sea of red in the markets. When it comes to the indices, Reliance Industries is the top loser. Apart from that, HDFC Twins, Kotak Mahindra Bank are the ones which are not aiding to the overall market condition. But clearly, IT stocks which are really rejoicing the rupee weakness, Mangla.
That's right, but you know, in just the last few minutes, I think there's some strength which has come in on the rupee from the record low of around 72.67. The rupee is now appreciated back to levels of around 72.5, so 14-15 paise recovery there that we've seen on the rupee. As far as the Nifty is concerned, a large part of it is also because of accelerated selling in the futures market. So the Nifty futures premium, which was at around 49 points just about yesterday's trading session, 45 points, that has seen a premium come down to about 34 points. That is one. Add to that, we're seeing some selling in the 11,600 calls. So perhaps the bears believe that the upside can be capped and they are looking to eat into the premium of that 11,600 call, close to around 12 lakh shares added out there. The premium in the morning was close to around 100 rupees. Now it has become about 85 rupees. But let's move on to the top story. Then we're tracking the rupee hits a fresh record low of 72.5 to the US dollar, with the benchmark bond yield trading at its highest level in the 4 years. Lata, a bit of recovery from the lows, but weak nevertheless.
Well, this is getting to be a bit of a concern. First, the positive in the sense that this is still an EM currency problem. If you look at the year-to-date performance, then a lot of currencies are worse than us, but increasingly we are getting there. I mean, Indonesia was still ahead of us, but now year-to-date we are 11% down, they are 10% down. Today itself, you had other currencies also, the Filipino peso, the Indonesian rupiah, Korean won down 0.6, giving us company. And it's exactly these reasons that are flashing for you. That one, very strong US jobs data means that there could be more Fed rate hikes and certainly not less. And secondly, normally you benefit, Asian economies benefit when the US does well because they trade with the US, they export to the US. But now this is coming on the backdrop of President Trump tweeting that a further $260 billion of Chinese goods could get impacted, and that he's also going to look at trade with Japan, which will mean more supply chains in the ASEAN region could get affected. So now US's strength is not EM's strength. It is actually EM's weakness. It's a double whammy of both the Fed rate hikes and possibility of slowdown because of tariffs. So that's the EM story, and rupee getting pulled down because of the contagion. The other is the India-specific story. You know, repeatedly now, the NDF market, which is the offshore value of the rupee, is turning out to be a little stronger than what Indians are doing. It's largely an importer buying that's happening. And what is worse, it's happening on the back of some support that has come from both RBI and government. SC Garg has given an interview over the weekend to say that the rupee has fallen enough. So until now, you had the government saying they're comfortable and that the rupee is finding its own level. Now they are not comfortable. And the Reserve Bank as well intervened, with lots of dollars being sold by them or through PSU banks on Friday, in spite of RBI walking the government talk. We have not seen the rupee get any support. So today it is a bit unnerving now. Now it's a slippery slope, and while we wanted the rupee to get corrected so that the trade deficit and the current account deficit get corrected, it is probably getting into overshoot terrain, and now people are very freely talking about 73, and why not? It's only 40 paise away. And an overshoot can even take it to 74. So we are entering what you can call the fear factor region.
All right, fear factor there when it comes to the currency market in India. Unabated fall in rupee has been seen today, and the government agencies, despite saying they are uncomfortable at these levels, the rupee fall has really continued. Now, we spoke to a whole host of experts on the rupee trajectory as well. Hear out what they have to say about the rupee depreciation.
I think we need to put it in perspective. This pales in comparison to what's happened in Turkey and Argentina. And, you know, I think we can lose sight of that. We can also lose sight of the fact that on the sidelines, in terms of the investor interest we see, particularly from the global real money community, that once we do see this EM contagion subside, and whatever the trigger for that is going to be, there is a lot of interest, particularly across fixed income, particularly across equity, to come into this market.
To my mind, is not really being driven by speculative money. It's actually just a mark-to-market of the new reality in terms of the trade deficit and the current account deficit. We have seen about 8% weakness in real terms, real effective exchange rate terms, which was actually quite necessary just to ensure that the trade deficit does not keep on increasing. And I think the approach from the government so far has been not to really be too aggressive in terms of verbal intervention. I think markets are really waiting for the government to take a more aggressive stance, or either sort of announce that they are looking at certain measures which could stop the move.
The reality is our flows aren't looking great, and we have a problem of our basic balance. Our current account deficit has been expanding over the last couple of years. And it's not just oil, it's also smartphones, it's also gold, and it's also extremely tepid exports. So all put together, our basic flows aren't looking great. RBI has plenty of reserves to manage volatility. But if you let go of the rupee too quickly and too rapidly, that can beget its own panic. And therefore, the need for careful management and calibration of the move is important.
All right, so does that, and rather how does that impact all the listed companies? We have Sonal Bhutra who joins us now to give us the impact of the weak rupee on companies with high net forex outflow. Sonal, what have you got on your list?
Well, there are a lot of companies, Manglam, and it will have both negative and positive impact on a lot of companies. And Moody's came out with a report today saying that weakening rupee is credit negative for a lot of companies, but overall the effect is quite minimal. But I'll start with the companies which will be negatively impacted by a falling rupee. The companies with net forex outgo, of course, will be impacted, or those who have higher foreign borrowings. The oil refiners are topping the list, like IOCL, BPCL. They have high foreign debt in their books. Also, the airline companies like Jet Airways, they have high exposure to foreign debt, but of course they have some sort of hedge against it because they have some dollar revenues as well. Also, there are companies like Tata Chemicals that have around 90% of their reported debt in foreign currency, out of which 70% is dollar denominated. So that is something that we are watching out for. Power companies like Tata Power, Adani Power, Inox Wind are some companies that might be hit because of this rupee depreciation. Input importers like JK Tyre and Asian Paints also might be impacted. Also, we spoke to Blue Star today, who said that 60% of their raw materials are inputs which are imported. So they said that around 100 to 250 basis point of margin impact are what they're expecting due to INR and also raw material price increase impact. So these are certain companies which will be negatively impacted, but of course there are companies which will be positively impacted as well. And the tech companies top the list. The likes of TCS, Infosys, Wipro and HCL Tech will tend to gain because of this. And pharma majors like Sun Pharma, Lupin, Dr. Reddy's will also benefit. In fact, Lupin told us that for every 1 rupee depreciation, the profits will be increasing by around 40 crore rupees. And also, while the input costs are also in dollar terms, but still the net impact will be positive for the company. And also the auto majors will be impacted. 60% of revenues for Bharat Forge, that comes from exports, and 45% of revenues for Bajaj Auto also comes from exports. So for Bajaj Auto, 1% depreciation in rupee impacts EBITDA positively by around 2%. So these are some companies which will be impacted. Back to you.
All right. Thanks so much, Sonal, for giving us that impact on companies of rupee weakness. But take a look at rupee. In the last few minutes of trade, it has found some strength at lower levels. So it is now above that 72.5 levels. So that was a crucial level. And because of that, also take a look at the overall market. Sensex and Nifty have also come off the low point of the day. So keep an eye out on that. The rupee trajectory is what the markets and the frontline indices are really following. But where is rupee headed from here? We have also spoken to some of the important guests on that. And earlier today, we caught up with Koon Go of ANZ Research, who says that there is room for rupee to depreciate further from these levels.
U.S. Federal Reserve looks like they're going to hike rates. That's fully priced in by the markets, and the strong payrolls numbers on Friday pretty much cements not only the rate hike this month, but also another one in December. So that is also going to continue to put further pressure on EM generally. The fact that the rupee is still expensive means that there's room for it to weaken further in the near term. RBI themselves, while they have intervened over the early part of this year in order to smooth volatility in the rupee, they have pulled back a little bit from FX intervention, probably to ensure that liquidity onshore doesn't tighten too much. And that's another reason why, suddenly we've seen quite a sharp weakening in the rupee.
All right, so that's as far as the rupee is concerned. Lata is still with us. Lata, earlier on the rupee, you quoted Hemingway saying that, first it fell gradually, then suddenly. Let's move on to the power update now. Out there, will you quote Animal Farm and say all are equal, some are more equal?
Well, at the moment, it looks like they're not more equal,
right,
because the power companies have been trying very hard to get a stay on the Reserve Bank circular. And after losing at the Allahabad High Court last month, losing in the sense not being able to get any stay, power companies, and this was Anshu's story, our reporter from Delhi, that they're further approaching, these three companies, Assar Power, GMR Energy and Ratan India, had further approached the Allahabad court asking for a 60 to 90-day stay on the Reserve Bank circular, which the deadline for which ended on August 28. Now, it looks like they have withdrawn that plea. So that's a very, very significant development from a Reserve Bank point of view, that in any case, asking anyone to give directions to the Reserve Bank was really a very tall ask, because in the history of the Reserve Bank so far, no directive has ever been given to the central bank. So it was a tall ask, and for some reason, the plea has been withdrawn. I do not know the reasons, but I do know that they have withdrawn that plea. Other pleas are, however, continuing, or petitions. One of them is RKM Powergen and ILNFS Energy are challenging the RBI circular in the Madras High Court, and Punj Lloyd is challenging the circular in Delhi High Court. There's another challenge in Ahmedabad from some shipyards against the Reserve Bank circular. And I'll tell you why all these are coming to a head, because April 28th was when the 6-month deadline ended. And after that, banks were told you have 2 weeks to take the companies to NCLT. The 2 weeks end on September 11th. That's tomorrow. So, everybody has to challenge today or tomorrow. And that's why you have these spate of cases that are being registered. Some of them, of course, could be heard tomorrow. One, of course, is the Allahabad challenge, which has gotten withdrawn.
Wee bit of recovery as far as the Nifty and the Nifty Bank is concerned. A 20-point recovery from the lows for the Nifty, as well as the Nifty Bank about 60 points from the lows. And that is primarily because we're seeing some bit of recovery on the rupee from the lows of today's trading session. About 20-25 paise thereabouts is the recovery that we've seen, 72.30. Now, remember, the lows of the day were closer to around 72.67 thereabouts. So some recovery seen there, a bit of recovery from the low point of the day for our markets as well. But Sapna Das now joins us with what the government officials are saying about the rupee depreciation. Sapna, what are you gathering?
Hi. So basically, the message, or rather the feel here in the government corridors is very clear. There is a worry on the rupee, the way it has slided during the last couple of sessions. Both the RBI and the government are very vigilant on this issue. They're very concerned. You have to look at these words which we have put out in our liners. I think that should convey the spirit of the message. That's one. Second, however, they're also very clear that there's a very wrong perception in the market that, the government is not bothered about the slide. It's nothing of that kind at all. Whatever measures are being taken, are being taken in terms of interventions as well. And going forward, further measures are not ruled out. So a couple of things that we need to keep in mind. A, they're looking at the CAD situation very closely. Though, of course, the good part is that, the CAD gap, according to the government, is not very large right now. So not an immediate concern, but they're looking at bringing down CAD. That's one. So probably there could be some import compression. I really don't know what they have in mind, but that's one. Second, also they're open to the concept of NRI bonds. In fact, $25 billion is what is being spoken about. So nothing on the table in the sense, like no decision taken as yet, but the government is actively thinking on these lines. So as and how, if there's a requirement, they will announce measures. They're very clear about it. The third aspect, of course, is the fact that they also do not expect the rupee to go to the 80 rupee levels. There had been certain comments earlier on that account. So that again is very, very clear. So this is what basically encapsulates the entire thing, that they are every day in touch with the Reserve Bank of India. Whatever steps are to be taken are being taken. Further steps are not ruled out. On that particularly, I mentioned the CAD issue and probably raising some foreign inflows as well. So it could be on the FII, FDI front as well. FDI front, of course, will be long term. FII front, if they have something in mind, as an immediate measure, they're also, I mean, NRI bonds can also be considered. All these situations, all these, the dynamics, the mechanisms will play out as and how required. Obviously, government will not reveal what they exactly have in mind. But this is a key takeaway, and yes, there is a worry in the government circle. So the first time we are getting the signal very clearly.
All right, so worry is there. Sapna, stay on with us. Worry is there, but at the moment, these comments coming in from the government that we are intervening on the rupee as and when required is a very, very conciliatory and a very pacificatory statement coming in on the rupee front just at the time when rupee is also getting support at lower levels. So some bit of recovery seen in rupee, but also, Sapna, the top worry also for India has been the fuel prices, and top government officials also reveal that they are not looking at an excise cut on petrol and diesel, even if they are at high prices. And also, for all practical purposes, probably the opposition-led Bharat Bandh has been a failure so far. So what's the word coming in on the excise on diesel and petrol?
See, we are very much clear, we are very much aware about the fact that any decision on the excise will be a big decision. A 1 rupee cut on excise in terms of petrol, diesel, leads to a revenue a loss of around 14 to 15 odd thousand crores, because in the last couple of months, the consumption levels have also gone up to that extent. I suppose the buck here lies with the state governments, and the perspective is pretty much clear. The central government always has specific rates. So even if your international prices are going up, the government doesn't really have a windfall gain. The windfall gain probably accrues to some of the state governments, right? Where the rates are, where the duties are ad valorem. So probably there's a tacit, tacit nudge or some kind of a, expectation that probably it's the states who should now take the story forward.
All right, Sapna, thanks a lot for that. Something that the street will be watching out for along with the consumers. But the domestic mutual fund industry has crossed 25 lakhs of assets. But the August inflows into the funds were at a 19-month low. Net inflows a shade under 6,000 crore rupees. Prashant is here with the number crunching. Prashant.
The data isn't good. The month of August, mutual funds saw under 6,000 crores in terms of inflows. And that by itself, compared to July, is about 44% lower. Go 4 months back, May and April, etc. We were at 12,500 crores. Go back to December of 2017, it was 16,000 crores. And of course, the peak was 20,000 crores. So by any comparison, these are a poor set of numbers. This is basically pure equity inflow. You add the arbitrage sort of money, which AMFI started to give separately, and include the ELS's equity portion as well. We always look at balanced inflow separately and the ETF money separately as well. So balanced numbers are on your screen. It's an improvement over the month of July. It had shrunk to extremely small levels of under 300 crores in July. It's about 26-30 odd crores in the month of August. But look at this compared to even the month of March this year. Almost 6,800 crores the number was. We're at about 2,600 crores. So it won't move the needle. ETFs, actually has been an absolutely volatile number. June saw a very large spike because of the Bharat 22 ETF. July saw a negative number because people who got the allotment sold. And then August, it's come up to about 1,800 crores or so. Again, pretty volatile and hard to take anything away from these numbers. Let's put this into context. So the two comparisons are the money that came in the month of August compared to the monthly life high and the 2018 average. We are down 70% as far as equity schemes are concerned. From life highs, we are down about 40% compared to the 2018 average, which is, the monthly average between January and July, excluding August. And balanced schemes are also on your screen, 70% lower from the life high, 33% lower from the 2018 average. Remember, the systematic investment plans, the SIP numbers still are what is driving what is actually still coming in. One would imagine we don't have the final SIP numbers. It will come out in a few days. But one would imagine those numbers would have also taken a bit of a knock in the month of August, given that the overall number into equity schemes has fallen quite a bit. Back to you.
Keep an eye out on the markets, especially the rupee movement as well. So markets, Sensex, Nifty, both over 1% down at this moment. Rupee has seen fair bit of recovery in the last few minutes of trade. And with that, the markets have also recovered a tad bit, but still weakish in trade. So at the moment, 72.26 on the rupee. Bharti Infratel is on my radar. That's a stock which has really perked up in the last few minutes of trade. So keep an eye out on Bharti Infratel as a counter. Now, as the soaring fuel prices continue to burn a hole in the consumer's pocket, remember, Congress, along with other opposition parties, are really observing a nationwide Bharat Bandh today to protest the spiraling fuel prices and also the rupee downfall against the US dollar. Now, Congress President Rahul Gandhi has been joined by former Prime Minister Manmohan Singh, as well as UPA chairperson Sonia Gandhi, as well as the DMK, RJD and Sharad Yadav's LJD at the Ram Leela Maidan, which was, remember, skipped by the Samajwadi Party and the Bahujan Samajwadi Party representatives. Now, the agitation that remained peaceful in most parts of the country today. However, the demonstrations turned violent in Bihar's Patna, where protesters burnt tires and halted the traffic movement in the city, while the MNS workers reportedly vandalized buses in Pune and blocked the metro rail line at DN Nagar station between Ghatkopar and Andheri in Mumbai. So some stray incidents definitely, but for all the practical purposes, probably businesses are running at the moment as far as the Bharat Bandh is concerned.